What's up, guys? It's Tyler from Foundation Investing, and I'm super excited to kick off our economic indicator series where we talk about what these numbers mean and how they can help your trading. So this one, for this week, we're going to do ISM and PMI, and let's get right into it. So what is the ISM? Okay, because oftentimes you hear this number, no one knows what it means. Is it even a number? And it actually turns out it's not a number. The ISM stands for the Institute of Supply Management. ISM publishes the Manufacturing ISM Report on Business. And in this report is where the number is published. The number is based on data compiled from purchasing and supply executives nationwide. And just to be clear, the manufacturing report is the one you want to care about. They also produce a non-manufacturing report, but that one is not considered to carry as much weight on the street. The manufacturing report is the one that Wall Street cares about the most, despite the fact that we're still largely right now a service-based economy, but the street cares about what it cares about, okay? They can't really change that. So the PMI, what is the PMI? Well, that is the actual number in the report that's released, and it stands for the Purchasing Managers Index. PMI is the actual number released and followed, sometimes referred to as the ISM number, although as we now know, it's not technically correct. ISM is the organization, PMI is the number. This report is released at the beginning of every single month, and it's created by serving purchasing managers from across the entire United States. So respondents are asked to only report on info for the current month, not year to date or last year, just is their business doing better or worse in this current month. Now, I'm sure everyone has maybe heard the PMI or the ISM, but very, very few people actually know what it is, what composes it, how it's created, and either did I when I first started off. So let's get into it so we can all know what the heck it is when it comes out. So it's created by five different things: production levels, new orders, supplier deliveries, inventories, and employment levels. And we want to know if it's contracting or growing. So obviously if stuff's growing, that's bullish. The manufacturing sector is expanding and it's bullish. If it's contracting, just the opposite, bearish. It's things are slowing down and contracting. The one thing that is a little different than the rest here is the supplier deliveries. You can see I wrote fast or slow. So what that means is slower supplier deliveries are actually bullish, because that means the manufacturing plants are producing so much the suppliers can't keep up with the inputs needed. If the suppliers can keep up and they're quick deliveries, then that means it's bearish, okay? Because manufacturing is not that hot. They're not pushing out that much stuff out the door. So each five of these things get their own rating and are combined to create the overall index, or what we know as the PMI number. Now the PMI number ranges between 30 and 60%. Okay, so it could get a little bit higher, a little bit lower. Usually it's around the 50s. So you see this number come out, it's like 54, 52, 48. A reading above 50 indicates that the manufacturing economy is actually expanding. A reading below indicates that the overall manufacturing economy is generally contracting. But one caveat to this is, as long as PMI is above 43.1 over a period of time, it indicates that our overall economy is expanding. And that's something that the ISM will write in the report, just for general knowledge. Wall Street typically cares about if it's above 50 or below 50. So here's a graph of what this thing actually looks like. So it looks like a business cycle, right? We get ups and downs and booms and busts, and it just moves sort of sideways, right? It is an index product, so that it makes sense. Behind it, I have SPX graph from all the way from the 1950s till now, and so you can kind of see what it looks like in comparison to the PMI. From this graph, it's hard to tell what actually happens. Maybe really at the end there, you can see how PMI tanked right when we had the 08 crisis. But let's dig into the actual data and see if we can find something out about what the PMI can do to the market. So first, took the occurrences where PMI crossed from above 50 to below 50 since 1950, and we looked at the 1, 3, 6, and 12-month returns of the SPX. So surprisingly enough, after the cross, we usually actually get bullish price action out of the SPX. So despite the fact that we go from a growing to contracting reading in the PMI number, you can see the 6 and 12-month returns here are positive 72% of the time. Okay, so just as a standalone indicator, this thing doesn't really help us or tell us much in terms of making money in the market, which is why we're all here. We care about the PMI because we're going to use it to make money, not because we actually care about the PMI. So let's go to the next slide here where I tried to develop a takeaway. So can this thing help us? Can PMI actually add value to our investing process? And I think it actually can. So in the last 20 years, here are all the crosses when we went from above 50 to below 50. And you can see it actually occurred before the '08 crisis and after the dot-com bust. So what this tells me is that when we do get that cross, there's a potential for a huge sell-off or recession to come. It doesn't necessarily mean it will come, but there's definite potential. So you can see the 12-month returns in the '08-'07 readings. We had 38% down move in the SPX and a 44% down move in the SPX after these readings occurred. Okay, so it's important to remember here that the ISM report and the PMI number creates a picture. It paints a picture to develop context in conjunction with all the other factors that you look at to make money in the market. So for instance, if PMI were to cross and we had bearish price action and we saw other top line indicators coming in bearish and we had bearish sentiment, then that could mean that, hey, we can make money on the short side. But just because it crossed, that doesn't mean too much. So keep that in mind when you look at PMI. I hope this video helped you a lot. And if you liked it, feel free to comment below, subscribe, and share it with your friends. Have a happy holiday, and I'll see you soon.